Atas, tapi atas kena tu.
Okay, good morning, everyone.
Good morning, sir.
Good morning.
Morning, sir.
Hi, yeah. Okay, let me start the session because it's already 10:01 and I've got so much to tell you all, right? So I want to go fast on this, yeah. So as others join in, so we will see that they will be able to catch up. So thanks for being here this morning. Hang on, share screen. Right. Share slide. Oh. All right. So can you all see my screen, my slides? Can, right?
Yes, sir.
Brilliant. All right. Okay. So we will start with this, and okay, let me do a presentation so it looks better. All right. So you can see that I'm going to look at the slide presentation. And in case you guys, when I go to the next slide, I'll ask you whether you are able to view the next slide. If not, then let me know, please. Okay.
Why is it that you come to a world
Hello.
of carbon?
Yes.
There is, I can hear some background news, some other lessons going on. Can you mute your mic, please, so that there's no disruption, if you don't mind, everyone? Boleh, huh? Okay. All right, with this, let me welcome all of you. Selamat pagi dan selamat bulan Ramadan to everyone, right? And I am Gobu Nachiapan, and just very quickly, I'm a chartered management accountant, right? And also designated as a chartered global management accountant. And I'm going to speak to you about environmental management accounting today. And the word environment comes very close to our earth, right? The earth we are living in, our home, and we know that there is a lot of concern about this, the environmental impact that companies and the society has, and the global warming is a serious issue nowadays, yeah. And a lot of scientists and everybody working on how to save our earth. And so it's all about saving our earth, right? And what I'm going to speak about here is what's the role of accountants in contributing towards saving this world. And we accountants, I think when I say some of your background, some of you are from accounting background, or please some are engineering background. Hello, you can still view me?
Yes.
Yes, sir.
Let me just adjust a bit on my internet thing. Just hold on for 1 second. Okay. Now we are on because the connection is a bit weak, so we're going to adjust it. All right. Now, so what I'm going to speak about is what's the contribution of accountants, right, in towards reducing the impact companies has on the environment and negative impacts. And we accountants are basically, they provide information. So when we start looking at the global warming, we start looking at where does it all start from, and we realize that it probably starts from the corporations, companies. Why do companies make such a decision to throw away discharge, and then you have so much of carbon emission to the air and all that? But why they disregard this and continue to produce products causing damage? And not only they damage, they also produce sometimes unhealthy products and all that. So you see, managements in a company, they make decisions based on information given to them, and one of the vital information will be management accounting information. And this is where we are looking at the global United Nations also have taken effort to see where does it start from. Let's take a look at management accounting, the way information is reported to the directors and managers to make a decision, how improvement can be made. And this is where environmental management accounting has come to existence. Yeah. So last time there was management accounting without the word environmental. And as I go on, we will be able to understand more about what's the difference between management accounting and environmental management accounting. And also towards the end, I also will touch on some engineering, because engineers do play a vital role nowadays, and scientists on reducing these greenhouse gas emission and all that. So today my objective is to enable you to understand what is EMA, its increasing importance, and also new developments. Yeah, what's happening in the world in terms of EMA. And those who are accounting background, right, those who are doing your accounting course will be obviously in particular, I will expect you to pay close attention and possibly raise some questions that you need to know or want to know or unclear. And those who are not accounting background, I also equally welcome you to, ask anything, right, concerning this environment and management accounting and all that. And probably you might have questions which surprise me, which I still have to do some thinking about it. So it'll be interesting that if you come up with questions where I also have to sit and do some research before I can answer you. So this is my objective, to enable you to understand. But end of the day, it's the outcome that is important, right? So what I'm going to input to you is one thing. This is what I'm going to input to you, but the outcome is in your hands. Yeah. So at the end of the day, outcome will be, I expect you to explain, of course, to yourself and to anybody else, because I'm not going to give you a question to test. And towards the end, I might give you some questions for you to try, right? And understand. There's a case study also I put in so that you can do some computation and appreciate the workings. Sometimes we accountants have like figures, then only we draw ourselves into, the mindset of figures, right? There are a lot of many information which are not figure related or money related nowadays. Yeah. Okay, so end of the day, you should be able to explain conventional management accounting, the old days of management accounting, and the drawbacks, right? That's most important. I'm going to start off with that. Then types of accounting discipline. This is to appreciate by those who are not accounting background. You'll know that the accounting got different discipline, 3 types of discipline. I should quickly go through. Next thing is the environmental pressure on organization. So why organizations are turning your head towards environment, and why there's a lot of environment thinking there. Maybe it's a rhetoric, maybe it's just on paper. At the end of the day, they're not going to do anything about it. Maybe, we are slow on reacting, basically. Yeah. Okay, so what are the pressures that organization has? Then environmental cost. What is meant by environmental cost? Again, there's a gray area, a lot of definitions and unclarity here. So I'll look at few definitions here or a few examples. Next, what is meant by EMA, Environment Management Accounting? What is it actually? Then what are the techniques? EMA techniques, especially. Yeah, there are 4 techniques. I'll go through the 4 techniques very quickly. Then what are the benefits and uses of EMA? How do we benefit from embracing EMA? And EMA challenges. Now, why it cannot be implemented full scale? What are the limitations to implementing this? And then global EMA efforts by the United Nations, right? Then we have what's the characteristics of the 21st century corporations? They should become more responsible, and I'll tell you, in every aspect, environment issues must be there. Yeah, not just on the product and production alone. Next, importantly, designing out waste from civil engineering projects, right? Because I was told that some of you are from civil engineering background, so I like to touch on how you can contribute, right? Apart from accountants, you personally can contribute towards this greenhouse gas waste and greenhouse gas emission. So this is the outcome that I'm expecting from you. And it's important that you listen carefully and appreciate. Yeah, this morning is a good morning, so hopefully be able to end of the day say that yeah, it's worth spending the time. Yeah, so my schedule is about an hour to cover this. So some aspect I may go a bit fast, some require a bit more slow explanation. So, and please slow me down and please raise questions, because I can't see you, because I only can see my slides, right? And I want you to feedback to me through your mic, right? And tell me that you can't see or you want me to explain again, whatever it is. So it can be an interactive section, please. It's going to be very short, but there's still room for interaction. So for you to ask any questions, basically. Okay, so far everybody clear? Say yes. Somebody?
Yes.
Yes, brilliant. Yeah, okay, can. Right? Okay, great. So let me go to the next slide. All right. So can you see the slide? Next one. Can you all see the next slide? Conventional management accounting.
Yes.
Can, huh? Okay. Conventional management accounting. So this is very important to appreciate what we fail to do and the accountants fail to do. All right. Okay. Let me take you to a factory, an automobile factory, to explain exactly what management accountant role in an automotive factory or any factory for the matter, because EMA is closely linked to factories production. In service sectors and all that, very less is still in the initiation is there to be also green practices in service and all that. But in particular, automobile industries or manufacturing sectors, right, especially oil and gas, construction, this is where the environmental impact, negative impact is very significant. Right, this is where EMA becomes very important to focus on these factories. So automobile factories. So as any factory, we will have input from the environment. There'll be raw materials will be input to from the environment to the factory, and we convert the raw material into finished goods. This is typical for any manufacturing, any products we buy. It all starts from the input from the environment. So this input will be processed into a finished product. All right. So during this process, there'll be a lot of things happening, activities in the factory, which contribute to the end product as well, contribute to waste and emission, which we know, because when we drive our cars and we pass by the highways or sitting from home, also you can see black smokes somewhere far. We can see black smokes are coming out from the factories. And it's going on. Nobody stops it. It's going on despite regulations and emission standards and all that. But still, there is companies are doing that. Only thing is, we people, common people, we stop burning already. We are a bit more conscious about the environment because we don't have any economic objective. We only concerned about health and well-being. Whereas companies are economic motive is there, profit motive is there, right? So I think we as individuals, we are more responsible towards this global warming rather than the companies. Because me sitting here in Ipoh, I can just look around my window and see black smokes every day, right? And well, that's life, So let's go on. So that means during this process, there'll be a lot of activities going on in this company, in this factory, and we'll see what are the activities. First, I denote them as ABC, so there's a flow in that for your understanding. And first, there's a material input 100%. Let's say the cost is 20,000, which is steel, because it's also automobile factory. So steel is the input into a automobile factory. So a lot of steel coming from the environment and all that processes. All right. Next, we'll have labor. Input labor, which is about 5,000, and this labor, semi-skilled labor, skilled labors, and all that, they will work on the material. Working on material, that's input there. And then we have energy. Right, energy is about 4,000. I just put a figure there for you to understand. So about 4,000 energy. Energy is power and electricity and water and all that is the energy we're talking about here. Next, we also have added materials. During the process, a lot of material will be added. Components will be added. So we add more materials, components and all that, different parts and all that, accessories and all that. There will be added materials coming in about 15,000. Then of course there'll be skilled labors in a manufacturing environment. Now a lot of skilled labors. So we have all the experts there, skilled labor working on the finishing of the product and all that. Okay, this is exactly what's happening inside a factory, whether it is an automobile factory or it's a furniture factory or any other factory. There'll be input, there'll be labor, there'll be added material, there'll be energy, there'll be skilled labors and all that. It's typical. But the material they're handling will be different, that's all. All right. So So the material they're handling can contribute to a lot of waste. This is very important. So what happens? So if you add up all this total amount, can you tell me how much is it? Somebody, if you add up all the total spent. Hello? Can anybody tell me how much the total spent? 20K plus 5K plus 15K plus 4K plus 18K. How much?
62K.
Very good. Excellent. Right? May I know your name, please?
Alif Nabi.
Alice, eh?
Alif.
Alice.
Alif.
Alice, thank you very much, Alice.
ALIS.
Anis.
ALIS. Sir.
ALIS. Alice. Oh, okay.
Bukan F.
F. Alif. Oh,
Yeah.
Alif. Thank you very much, Alif, for your response. I really truly appreciate.
Welcome.
And
Sir.
you can be the anchor man for me. All right. Please stay with me. And when I ask questions, you can respond immediately. So the session won't get slowed. Okay, 62,000 is the total amount spent now. That is 100% material input. And what happens now? All right. How the output going to be achieved? Okay. First thing, we realize that during the process, there will be a lot of waste. This way, the environment impact comes in, right? So there'll be a waste throughout the process. Okay, so this waste will be in terms of water wastage. And water is a very important natural resources. Water wastage, we have energy wastage, electricity wastage, we also have material wastage, right? All the consumable elements and all that. So this waste will occur throughout the process at one stage to another, and the material moves. And of course, some waste is after we spend more money, the waste happens, right? And the waste also includes labor waste and all that, right? So now the waste, let's say, contribute about 5% waste. It means out of the 100% material, 5% is waste, right? Electricity, water, and materials. And very important, in conventional management accounting, this waste is considered normal. Normal means something cannot be avoided. So since it's normal, cannot be avoided, the management accounting system doesn't really calculate the cost of the waste. Only they calculate the weight, 5% wastage, that's all, 5%. But what's the cost of this waste? How much money have you spent and wasted? They don't calculate. That's very important. That's normal management accounting, traditional normal accounting. And they say this is normal, cannot be avoided. It's not our the factory's problem. So this cost must be borne by the customers. So the 62,000, we can see some of the 62,000, maybe 1 or 2,000 actually wasted into the environment. But we don't allocate the cost to the waste. We don't because its loss is considered as normal. This is interesting for those who are not accounting background. Next, we also have emission, right? To the air emissions. Then this emission contribute again about 5% of the weight of the material. When you process the materials, you burn and all that, you heat the materials, it actually naturally evaporates. So there is a lot of evaporation to the environment, the material, and actually it's a material evaporating. But again, we don't assign any cost because this emission is considered normal, cannot be avoided, right? So probably there's only effort to measure the physical percentage of emission, but there's no cost attached to it, right? So that's another important thing. G. Next comes is H. H is solid waste, and this solid waste will be accumulated throughout the processes, and towards end, this solid waste will be disposed of, and that accounts about 20% of the resources used. So 20% of the resources actually become solid waste. 5% transmitted into the environment. Another 5% is thrown into the rivers, right? And it disappears like electricity wastage and all that. This solid waste will be disposed of into rubbish sites, into all these sites. And the cost of the wastage is not calculated. We only calculate the cost of the disposal, which is the transport cost. The lorry, we pay the lorry to throw it away, the manpower, maybe outsourcing and all that. So we only calculate the cost of throwing away the waste, but the cost of the waste itself, because the waste actually a lot of money has been spent and become waste. We don't calculate that cost. So again, there's a limitation here on traditional management accounting. So what we calculate is only the cost of throwing away, let's say, which become visible. We can see the cost. But the other cost we spend, we can't see it and we just hidden. We don't calculate it. No attempt to calculate it. This traditionally. Next, we also have byproduct. A byproduct means it naturally comes out from the process and we can actually scrap it. We can call it a byproduct or a scrap material, right? So we can sell these materials as a recycled product to other companies. So that account for another 10%. And let's say this factory here in particular is able to sell.
This share screen ke application we?
Pardon? Hello? Hello? Alice? Alice?
Yes.
Okay. Are you asking a question?
No,
No,
sir.
okay, Alif. All right. Okay. Now this scrap material account about 10%, but we're able to sell it. We're able to sell it for about 2,000. Okay, that means out of 62,000 is spent, we're able to recover 2,000 by selling these scrap materials. So the net amount we are spending is 60,000. 62 minus the 2,000 because we can recover back by selling it. So 60,000 is the net cost incurred, the total cost. Okay. Now, this 60,000 is going to be borne by the final customer. There you are, the car. So we have the car coming up from the finished product, the car. And this car actually uses only 60% of resources. It means out of 100% input, only 60% of resources go into the car. The other 40% has disappeared into the river, into the waste site, and also into the air. They have disappeared, the other 40% of the resources. Only 60% of the resources actually end up in the final product. And this 60%, consumers are going to pay the entire 100% of the cost, which is 50,000 plus profit of 25%. Let's say a profit markup of 25% if we add, the selling price becomes 75,000. And this is the price that the consumers are going to pay for the car, 75,000, which includes 60,000 for resources used. But remember, the 60,000 is also includes all the waste, everything. Are we all right? Are you following? Hello?
Yes, sir.
Yes. So it's important to realize that we as customer, we buy products from the market, actually you are paying for all the waste, but we don't know about it. But if you know, of course, we start questioning, why should I pay for it? Because I didn't waste I didn't waste, why should I pay for the waste? But this has been going on, all the while, all right? Consumers are paying for the waste without realizing, and companies continue to make profit. All right, companies continue to make profit. Customer production continues. More and more cars are being produced, and more customers are buying cars and all that. Companies are making more profit, but the waste continues. So this is the problem here we have. Okay, next thing is important also. All this money spent is now 60,000 is all private cost borne by the company itself. All right, private costs. Now, there's also carbon monoxide and greenhouse gases emission to the environment. Greenhouse gases, carbon monoxide, carbon dioxide, and all that. This goes into the environment. Similarly, the cars, that means not only the factory is giving greenhouse gas emission, the final product also contributes to greenhouse gas emission. The product that goes to the streets. Okay, next we have is all these carbon monoxide and greenhouse gases contribute to global warming, air pollution. And this air pollution does have impact on the society in terms of health and all that. So there will be probably increase in medical bills, increase in government have to spend more because more people are becoming unhealthy. All right. But these are external costs. We call it externalities, which nobody really compute. Right? Because the accountants are only concerned about what the company spent. And after that, what happens, they don't track on it. right? And even the government bodies, maybe they tried as an attempt to calculate all this. This is the national accounting, yeah, government to calculate all this, the impact of the greenhouse gas emission on the public and the burden on the government to finance all these medical expenses for the public, right? So again, this is external costs. They are not private costs. And similarly, there is also the solid waste being disposed of, create land pollution, water pollution, and disrupt the ecosystem, right? The natural environment, the animals, and all this also disrupts, causing a disruption to the ecosystem, which also cause, in the long run, there'll be a cost that we have to pay, external costs. Again, this is external cost, not borne by the company, and nobody pay for it, but is borne by the society, and the government have to bill it, right? Pay for it. Okay, now, this is exactly what's actually has been happening all along until recently. Global warming has become significant, and there is one of the theory that we might be facing a Earth that is dying slowly, a slow death. And when the Earth is going to die, it's not the Earth going to die. We will cease to exist, humans, but the Earth will continue. Hello. All right, the Earth will continue, but it will be a different world than what we see now. Hello. All right. So, but because of this fear of impact on the global warming and all that, there has been conscious effort. There's some agreement being signed, international agreement and all that, like Kyoto Protocol and all that, regarding the gas emissions and all that. And then there is also Environment Protection Acts and all that coming and all that. So there has been a global effort in terms of regulations on how to reduce this greenhouse gas emission and waste management. All right. So that's where environmental management accounting comes in. So these management accountants now have to calculate the cost of the waste. They have to calculate the cost of waste. Not only they have to calculate the cost of the waste, but they also have to calculate the cost of the solid waste, as well as they have to spend money. Companies have to invest in reducing greenhouse emission. So this is where management, environment management accounting has come into existence, when accountants start looking into the environment, information about the environment impact. All right. Everybody is clear? Any questions? Alif,
Yes, sir.
are you all right?
Yes, sir.
You think all your friends are all right?
I don't know.
Okay, come on, be more confident.
Yes,
Yes. Say yes, they're all right.
Yes, sir.
All right. Maybe they are not 100% like you, maybe at least 70% like you, 80% like you. So they should be fine, right? As long as they are somewhere around 80% of your alertness, we are all right. All right, we are all right. If there's zero, then only you have a problem. All right. So anyway, okay. So I hope that this slide that I'm talking convention management will make you clearly understand actually what went wrong. So that means management accountant did not give complete information to the management to make a decision. They treat something as normal, and they did not calculate the cost of this normal wastage and gas emission and all that. They did not. And nobody became aware the amount of money that is wasted. Customers are not aware, but they are paying for it, right? The damage has been continuously being done. So now the question is now, one, government has said, in terms of internally, management accountants have to calculate the cost of this wastage, emission, and solid waste. Also, they have to calculate the cost of preventing all this greenhouse emission and also waste. They have to do that. This is still private cost. Their companies have to spend all this. But then, from the external cost that's borne by the society, now government are coming with strict regulations where they're trying to make it as a private cost. So that means companies have to spend money to prevent the external costs. So when it becomes private cost, then it'll become even more that global warming can be managed better if all these costs can become private, which means that this private cost will be reported to the top management for better decision making. So if they know all these costs their company have to bear, then they will see they will become serious in terms of how to reduce the cost, not reduce the environmental impact. Because companies who are profit motivated, they are concerned about money. So when you convert the greenhouse emission, the impact into money, then they start thinking, hey, this is a lot of money for us, our profit going to go down. And then only you see some actions coming in. As long as you just talk about, nothing is going to be done unless it becomes money. So this is where the management accountants or accountants play a vital role, because they are the one in the frontliners to give information about this money to companies' top management. Are you all right? You're clear, everyone?
Yes.
Okay, great. So let me go to
Yes,
the
sir.
next slide. All right. Can you see the next slide?
Can.
Types of
Can,
accounting
yes,
discipline.
yes.
Okay, the type of accounting discipline, this is actually so for those non-accounting background students. So if you're not accounting background, I just quickly like to tell that this environment accounting, environment management accounting are not the same. There are three components to this, three disciplines on accounting. One is environment management accounting, EMA, which is a subset of environment accounting. So environment accounting is the whole overall accounting. EMA is more concerned about internal reporting within the organization. So the management accountants will report to the management, the directors, to make a decision. So it's the internal reporting, but taking into account environmental impact. Are you all right? Now, next is environment financial accounting. These financial accountants, they will report to external parties, external users like shareholders, the government, the lenders, and all that, the financial analysts and all that, what do you call the stock exchange and all that, right? So they will report about what the company's profits are and all that to the external parties. And of course, they also going to make a decision about buying and selling shares, lending and all that. But there is a lot of initiative to disclose this information about what efforts the companies are doing and what's the negative effect they have on the environment. So of course, we expect transparency here, but there's no proper disclosure standards yet. But there's global reporting initiative, GRI, which is looking into guidelines to report this to external parties. That's it, external, one is internal. Then we also have environment national accounting, meaning the accountant negara. The accountant negara, he calculates our national income, right? Gross domestic product and national income. And they're only looking at, again, traditionally, about how much is cost of producing it, the private cost. But now, the accountant negara also looking into the impact on the environment, how much government have to bear the cost of this environment impact, and also on the stock of natural resources, how much resources are depleting and all that, which are important for sustainable growth, right, for the economy. And this is a bit new in terms of national accounting. And this national accounting is reporting by the government, the accountant general, right? Also accounting. So they all are calculating profits and all that, but for different purposes. One for internal reporting, one for external, one for overall for the nation as a whole. What is the health of the economy in terms of national income and also impact on environment and all that. So these are the subset of environmental accounting as a whole. All right. So just to appreciate. So our focus is on EMA, you know. So EMA is not same as EFA. All right. EMA is all internal, right? How do we calculate the cost of wastage and all that, all right? And report to internal management to make a decision. Should we continue making the product? Should we cut down operation? Should you purchase new equipments to reduce emissions, right? And those kind of things that EMA is concerned about. Okay, so let me go to the next slide. Okay, why care about environmental issues? Why these environmental issues become so important? Can you all see the slide? Alif?
Can, sir.
Yeah, brilliant, right? Okay, now, you see, as I told you earlier, businesses are typical business mind, profits. We try to save costs. Obviously, every company want to save costs and they want to increase revenue to make more profits, right? So why bother about environment issues? Why companies have to be so caring about it? Why want to save the earth for what? After all, we make profits the motive of the directors. So the primary motive of companies is to maximize profit. And maximize profit means what? Minimize cost. So you have a choice to throw all the waste into river, you'll do it. Why bother? And you know very well companies have been doing it, like Johor. You know, isn't it? Right? Johor, they have thrown all the waste into the river and it's been contaminated and become air pollution, and students suffer, schools around that. So this is typical behavior of businesses because your motive is to maximize profit. I hope you understand. If I am a director of a company, I'll do the same. Why should I bother? Let other people bother. Let other company do it to clean up them. I want to maximize profit, man. And my impact is very small only, or not so big. Why should I bother? Only I'm throwing a little bit only. What? Other company throwing a lot. So let the company take care. For me, I continue to throw. And this is the mindset. This is the attitude we have. So why suddenly this environmental issue become of concern? Very simple, because of pressure. Pressure imposed on the organization from externally. If not, nobody bothers with this environmental global warming. Nobody bothers. We just want to continue making profit. We continue driving our car. No problem. So the pressure imposed on organization by whom? Regulatory control pressures. Example, EU regulation. So very typically, one of the EU pressure is on our palm oil. You all should be aware. About 2 years ago, EU passed a regulation not to buy palm oil from Malaysia because they said there is deforestation, and we are contributing to environment, negative impact on the environment, and they did not buy our product, and the price start dropping, and we start lobbying to them saying that no, we are taking care of the environment, we have replanting according to certain standards and all that, but they didn't buy into our idea, right? Our lobbying. So our ministers went to EU and argued and all that, but they still refused. But then they put certain rules to follow, and our government came back and they set the rules, and all small holders, big holders, anything, they have to implement these environment friendly practices. In terms of fertilizers they use, in terms of how they harvest the fruit, in terms of manpower they use, they have certain regulation to follow. And this cost of abiding by regulation is actually currently borne by both factories, the property owners, plantation owners, as well as the government is bearing this cost. But thank God, they are buying our product now, and the prices are up again. All right, back to quite a high level already. So what I'm trying to share is basically these regulatory control pressures not only put pressure on the companies, also putting pressure on governments to implement or to what do you call to enforce international laws. This is very clear, and this is important pressures. Next, environmental tax pressures. So there is also tax now, carbon taxes, energy use tax, emission taxes. So which straight away the companies become alert that they have to pay tax if they do this. So that is definitely a pressure. That disclosure pressures. So global reporting initiative, I told you that both shareholders, lenders, and all that, they are asking this question to the companies. Look, we are shareholder. We want to know what damage have you done to the environment. We want to know what efforts how much money you spend to safeguard the environment. They want to know. And companies are now forced to report on social issues, corporate social responsibility, CSR reporting, and what, especially the environmental reporting, they have to do it, right? So if you don't do any report on environment, then obviously the shareholders and lenders are going to question how come no environmental report. Part of your annual report, you are so silent about environment, they don't trust you. You don't build a relationship with them. So that's another pressure coming in. Next, we have supply chain pressure. So this is comply with large companies' environment management system. So large companies are subject to international laws already. There's MNCs and all that, and they are under strict observation, monitoring. So they will say, look, if I want to buy product from you, your material, you better be environment friendly. Otherwise, we can't buy it from you. So the big companies are putting pressure on all these suppliers right? To be environmental conscious in terms of you know negative impact. That means the supply also have to reduce the impact on the environment, right? Next, we have financing pressures. This is socially responsible investment funds. So there is increasing awareness about social responsible investment funds. And I must tell you, Islamic financing is one of them, because Islamic financing doesn't give finance for any negative impact on the environment and for the people. If you're going to make a product that's good, harmful, they won't give you finance. If you're going to make a product going to have negative impact, then but they're going to, the Islamic finance won't give you the funds. All right. But this is what we call it socially responsible investment funds through investment rating system. So there is an investment rating system like Dow Jones Sustainable Index. Dow Jones. So these are index that they measure nowadays, seeing the company's responsibility towards environment. If your index is good, then you easy to get these funds. Otherwise, they don't provide you these funds. So there's another pressure. If you want to grow, you want to sustain your growth, you have to source these funds. All right. And for sourcing these funds, you better look into the rating, right? And finally, cap and trade prices, cap on emissions, right? So amount of emission your product can give out, right? Like cars, the carbon monoxide, the amount of carbon monoxide released to air by a car should have certain cap, cannot be more than that, otherwise the product won't get approved by the authorities. So trade pressures, so these pressures are coming in now, yeah, especially from Kyoto Protocol. Is an agreement, it's an international treaty on emissions, right? So again, that's another pressure coming in. So without these pressures, there won't be environment management accounting. And my accountants, management account continue to practice the old ways of reporting. Directors will continue making the old way of decision, and the world become even more sick, right? And these are the things that preventing companies from behaving irresponsibly, by ensuring that when directors make a decision, they do care about environment issues. They cannot ignore it. You see, only when directors start giving regard to environment issues, then the accountants will react, because they are the boss world. If the boss asks to do, then you'll do. If no point you go and calculate, and they say, why are you calculating all this for what? Did I ask you to calculate? Wow, you are just an employee as an accountant. So it's not an effort that accountant not doing it. They know they can do it, but bosses don't listen to that. So what will make the bosses listen is these regulations, these pressures will make them listen. Only when bosses lend your ears to all these pressures, then they will appreciate EMA. Otherwise, they're not going to appreciate it. They say it's a waste of time calculating all these cost of waste and all that. After all, customer is going to pay for it. All these waste, customer going to pay for it. Why you want to calculate? No need what. So this is actually, well, difficult to say this. This is what business is all about. Even now, lately, yesterday, there's a news saying that Japan is going to dispose of nuclear waste into the Pacific Ocean. They're going to release it, and China is making noise and all that, because it's going to affect thousands of years of pollution to the ocean. Long-term impact, you see. So it's happening, even Japan is one of the frontliners in terms of global warming and all the initiative and all that. Kyoto Protocol is actually initiated by them and all that, but yet they are still also contributing to this pollution. Yeah, so SAT is no idea how to overcome, say like the COVID. Okay, now let's go to the next one. What is environmental cost? This is another one. So we already know what's environmental management accounting, what companies do and what companies are not doing and all that. Why they do it, we understand. All right. Now, coming to a bit more specific, what is meant by environmental cost? So this again, gray area. There are a few ways of looking at environmental cost. I have to explain to you. Okay, the U.S. Environment Protection Agency, they look at environmental cost as conventional cost, raw material, because it's coming from the environment. You are paying for it. So raw material is an environmental cost, right? Because it's related to the environment. Then we have potential hidden cost, energy, like water and electricity. Because the cost is very small, they go hidden into all the other ways, rental and all that. They hide in the, so there is no attempt to compute separately the energy and water cost. They don't do it. So the accounting system captures, but it hides into all the other costs as a lump sum. So there's no proper analysis then. Next is contingent cost. This is cost to be incurred at a future date in case something happens. Like example, you cause pollution, and because of the regulation and all that, you are imposed a fine or you're supposed to do cleanup. This is contingent, that means future. In case you fail to abide by the regulations, you have to incur this cost, penalties and all that. Next we have is image and relationship cost, because it's about responsibility. So this image is a bit more intangible, but is important for reputation. Like example, preparing annual report, cost of preparing environmental reports and all that. Also customer relationship, supplier relationship and all that. So these are all important to build all this. If you don't build, then you lose out. So that's actually cost, the cost of losing out also, right? The opportunity cost basically. Next, another environmental cost is in terms of interesting one, this one, Hansen and Mendoza. Alif, are you with me?
Yes, sir.
You're with me. So now we are looking at another one is from US Environment Protection Agency definition by environmental for definition. But this is interesting. The one I'm going to discuss now is Hansen and Mendoza. In 1999, they come out. They said environmental cost is because of quality control failure. Companies did not embark on quality control because they lack quality. Therefore, there's impact on environment. That's how they see it. So they relate environmental cost into quality. So first, there are environmental prevention costs. This is cost of activities undertaken to prevent production of waste, right? So we call it environmental prevention costs. To prevent waste, what are the money being spent? Next, environment detection costs. These costs incurred to ensure the organization comply with regulations, measuring the amount of emission, measuring the waste. So cost of measuring all these, detecting, investigating and all that is actually environment detection cost. So you have to have manpower and you have equipment to test all this, right? So the cost of manpower, equipment, all that becomes environment detection cost, right? So one is to prevent, like training, staff training, equipment purchase and all that, that's prevention cost, training and equipment, all that. The other one is measuring the amount of waste, measuring the amount of emission and all that, that is environment detection cost, right? Okay, now, next we have is environmental internal failure cost, meaning this one, cost incurred from performing activities that have produced contaminants, means our activities already produce contaminants or wastewater or wastage before we discharge to the environment. Before throwing, you already identify and we stop it and try to rework on it. So that is internal failure cost, means it's a failure, but we're able to detect before it goes to the environment, and we spend money to undo back before releasing back to the environment, right? So this is environment internal failure cost. Next we have is environment external failure cost, meaning here costs incurred on activities performed after discharging waste into the environment. That means once you discharge the waste to the environment, then some pressure coming from the government, whatever, and then it comes back to us in terms of penalty. So the penalty you got to pay will be external failure cost because of the pollution and all that. So that is penalty imposed and all that is external failure cost. Right? So we have four costs. One, prevention, detection, and one, failure cost. Okay, but interestingly, they also said that companies should have periodical environment cost report. That means all these costs, they must calculate and express as a percentage of either sales revenue or total operational cost. So you can divide by total operational or sales revenue and see how much percentage is spent on environmental prevention, how much being spent on detection, how much is internal failure cost and external failure cost. So all these are costs borne by the company, but we express as the total and see, monitor over time. We can monitor over time how the costs are, the percentage cost is being increasing or reducing. We can compare with other organizations if that, in case there are other organizations also reporting on that, right? So by preparing this report for management and by comparing over a period of time, the environment cost can be managed better. And then if you manage environment cost, the negative impact on the environment will also be minimum. So we are not talking about the pollution we are causing. We are saying that if companies are conscious about the cost, if they manage these environment costs, automatically the impact, greenhouse gas emission and negative impact will be also minimized. So it's an indirect way of managing global warming, right? By incorporating all these environmental costs into the decision-making process, all right? And more importantly, if you see the relationship here, okay, we have the one amount of money spent and time, as I told you. Okay, one is you can spend high amount of money and low amount of money. So you can spend high, you can spend low. Okay, first thing, let's look at the prevention and detection cost. That is buying equipment, training your staff and all that. Then also measuring all the emissions and all that. If you spend money on prevention and detection, high, you spend high or low, depends. So if you spend high or low, it will have a impact on your failure cost, opposite impact. If you spend more money on prevention detection, your internal failure, external failure will be lower because you are preventing already. So failure will be lower. But if you don't pretend, failure cost will become higher. You have to pay more on penalty and cleanup costs and all that. So you have a choice. You want to prevent, or you allow this happen and later you have to pay all the fines and all that. So we have these two costs which move in opposite direction. Okay. Now what is important is the total cost. When you add up this, become total cost. The total cost will become a U shape, and total environmental cost becomes a U shape basically. And over time, you try to minimize the total environmental cost. That's what Hansen and Mendoza is proposing. They say these are 4 costs when companies over time have to spend money on this and monitor the total environmental cost, and they try to achieve the optimum point. Optimum point, it doesn't mean that you have negative, totally zero impact on the environment. No. It's too expensive. It becomes too costly. Economically not possible because customers will end up paying too high a price. There won't be any economic activity. So interestingly, you cannot have zero environmental impact, negative impact, cannot. So companies will, like example, emission, greenhouse emission, cars will continue producing greenhouse gas emission, but we cannot completely stop it because it will become too expensive. So this model, which basically tells you like, let's take care of the environment and also take care of the business. Both. Business also you have to take care, you also have to take care of the environment. If you take care of the business only, environment will suffer. If you take care of environment, business will suffer. Somewhere we have to balance these two so that life can continue without much harm to us. We can live longer, more sustainable, right? This is the whole idea about this. Okay, any questions here, Alif?
Not yet, sir.
Boleh faham ke? Boleh faham ke?
Kurang dekat yang periodical environment cost report.
The report is just simply is every year or every quarterly, every 4 months, the management accountant have to calculate each component, like how much the company spend on prevention cost and divide by either sales revenue so that we express in percentage. How much percent of revenue is spent for prevention? How much percent of revenue is spent for detection? So we calculate in percentage. And after that, we report this. This report is given to top management to look at it and then see from time to time how the efforts they are making is dealing to total environment cost, because the total environment cost should be minimized. That's what we are gearing towards, right? As the company progresses. So in order to achieve the minimum environmental cost, this report is necessary, and they have to look at this report maybe quarterly report, and the internal management decision making have to make how the prevention cost and internal failure, external failure are related. When you spend this one more, this one is getting less. So they monitor over it and try to achieve the optimum decision, right? This is what it mentions basically. Alif, what background are you? What
I'm
course are you doing?
from electrical department.
Electrical. Okay. I already told you about electrical wastage. It's a common sense things, but the wastage continues. Is you know, right? So electric is an energy. cost, right? And I'm sure your institute polytechnic is very conscious about electricity usage, and believe so, definitely, yeah. And because part of education this is, right? Okay, next is also another view on environmental cost is a basic example when you boil down that instead of talking about prevention and all that, more to understandable level will be waste consumption, water. Water, first we pay for water, we also pay to throwing out the water. So to buy water, we pay, through also we pay. So this is a cost. Energy, right? Electricity. Inefficiency and wasteful practice result in higher energy cost, example, electricity. Again, that's environment cost, wastage, right? Next we have is transport travel, fuel consumption, maintenance, insurance, road tax. This is environment cost also, right? And of course, you can reduce it by investing more fuel efficient vehicles, right? Next we have is waste and effluent disposal. Those waste we discharge into the environment, and also the tax we got to pay, right? So this again is environmental cost. Next we have is consume raw material, like example toner cartridge for printers could be refilled rather than replaced. So instead of throwing the cartridge, which not easy to dispose of, become a natural and negative impact on the environment. Instead of that, why not we use a cartridge that can be refilled, which many printers are using, but some printers still use cartridge. You throw away cartridge and have new cartridge. Again, you see, again this one I think not only manufacturers they are producing two types of printers, one using cartridge and disposing, another one is refillable cartridge. But it's important that you educate the consumer as well, you know, so that consumers stop buying non-refillable cartridge. You know, it's all depends on education as well. Okay, so this example is is a bit more specific, like water, energy, travel, and all that. The other one, prevention cost and all that, is a bit more broader. Yeah. So we have a different way of looking at environmental cost, but I like the Hansen way of prevention cost, failure cost, and all that. But this is easier to understand. This way of analyzing environmental cost. So this environmental cost you need to understand, because only by understanding this, what is environmental, we can compute, and after we can understand how the cost can be reduced. Without understanding what is environmental cost, we don't know what we are calculating. We don't know what data to collect. So it's important that we understand what is environmental cost. But this way is easier, the one I'm showing, compared to Hansen prevention detection cost. And that's a bit more expertise involved. Okay, now, what is, again, important thing, as I told you again, these environmental costs are often underestimated because we don't know the true environmental cost. You see, so there's effort to calculate environmental cost by management, but the one you calculate is actually much lower than the actual environmental cost, because they fail to recognize what is environmental cost. So much of environmental cost involved there. Yeah. Okay. Research findings shows that every dollar of waste cost that company actually measure, another $2 or $3 of costs are hidden in the accounting records and not on the books at all. So there are a lot of environmental costs which are not accounted for, right? And companies typically understand how much waste really costs them. Like I told you earlier, solid waste. So when you calculate the cost of solid waste, you only calculate the cost of throwing away only. But the waste itself, the cost we don't calculate, right? This applies even to big, well-managed companies, this problem. And this is an example of cost of waste ink at a Southwire company that I just gave an example here. Cost of a drum of hazardous waste ink. No, after the waste ink is being discharged after use, you got to throw away this because it's already toxic material, toxic already. You cannot use it again, so you got to dispose of. So to dispose of a drum of this waste, initially estimated as $50. The average disposal cost per drum, $50 only now. But upon closer inspection, the true cost of waste was declared by 1,300 pounds, 1,300 ringgit, dollars, including 890 is a loss of material. The ink itself, they didn't calculate because they only calculate the cost of throwing away. But it's actually an ink. but cannot be used anymore, became toxic. You actually paid for it to buy. We are not calculating it. 369 for corporate waste management activities, 50 ringgit for the disposal, right? 47 for internal waste handling activities, 16 to pay hazardous waste tax. You can see the total is $1,300 to throw a drum. But when we calculate the cost of they throwing only $50, as though it is very slow. But when you report that to throw a drum is going to cost us 1,300, then you become more aware that the cost is too high, how to reduce it. All right. So again, annual costs are often underestimated. It seems like it's an iceberg, cost iceberg. Annual cost can be like an iceberg, which with only a small part of the cost become visible. Alif, can you see it? Hello?
Yes.
You can see the ocean, and the
Yes.
ship. Can you see the ocean and the ship? Can
Yes.
so you
Can.
see the ship and the ocean there, and suddenly this iceberg is appearing, bang, like that. So what we can see is only the top of the iceberg. We don't know there's a huge hidden iceberg there. If the ship is not careful, go knock, matila, the whole ship will become Titanic, right? So this is exactly what's happening to environmental cost. They are recognizing environmental cost, EMA, but the amount of environmental cost they are actually calculating, reporting is still low than actual cost. So the management or directors thinking that is actually very low. And the action they take is actually very simple actions they take to reduce it. Because the cost is very low. They don't get alarmed. But the actual environmental cost is huge. So this is where the United Nations is making effort to understand what is environmental cost and how to calculate the true cost of environment, so that the environmental cost can be calculated close to the true amount and reported for decision making, right? So there are certain EMA techniques that we have come up. EMA techniques we have. 11 o'clock already. Okay, now what is EMA? Environment Management Accounting. Okay, this is important just to sum up everything. United Nations Expert Working Group, they say EMA is first identify and collecting data. You have to identify and collect data first. All right, that's the first step in EMA. Identify and collect data. Okay, what data you got to collect is one, physical data. Okay, this physical data will come from quantity of inputs, measuring the quantity of materials input, labor hours used, quantity of energy, other cost drivers, number of inspections, number of drills, and all that, quantity of inputs. This is one of the measures have to have. Next, quantity of output, usage of material, how much material was actually used in the final product, how many hours was productive, how much energy was actually used, and how much is wasted, how much of value adding activity was done. This is physical measures. Next, quantity of wastage, quantity of material disposed of, quantity of material scrap, non-productive labor is actually considered waste, right? Non-productive labors, non-value adding activities. So what activity you do doesn't add value to the company, to the product. Wastage of energy, emission. So all these are physical measures in terms of quantity, kilogram, liters, and all that, right? So this is physical data. One thing, you have to gather this, identify and gather this physical data in terms of quantity. Next is monetary data. That means you got to attach money value to this data. This money value will become cost incurred. How much money was spent for material cost? One is quantity, now is about money. How much money was spent for labor? How much money was spent for energy and other costs? Next, cost output. What's the cost of the finished product? How much did we spend to complete the product end of the day? That's another cost. Cost of wastage, cost of material disposal, cost of material scrap, cost of non-productive labor hours, cost of energy loss, cost of non-value adding activities. So we are attaching all costs into all these activities. Next, environment protection and detection expenditure. This is something new. Cost to prevent generation of waste and emission. Cost to control or treat waste generated. This is actually internal failure cost. Cost for remediation of pollutant site. This is actually external failure cost. Cost to measure emission. This is a detection cost, right? So we have prevention cost, detention cost, internal failure, external failure, and research and development is also a prevention cost. So how much money is spent for all this? It becomes monetary data, right? So EMA starts with identifying and collecting data, both physical data and monetary data. After collecting all this data, right, the next step is to analyze the data. Analyze the data in terms of percentages, like what is like earlier told you that the report, right? You calculate the cost and express as a percentage. This is one part of data analysis when you express as percentage, because percentages become more meaningful, right, rather than data itself, right? So we express in terms of percentages. Then once you express in percentages and all that, that becomes information for internal decision making, the percentages. So directors will look at the percentage and they start deciding, wow, this is so high, the percentage, not the amount of waste, but the amount of waste compared to our sales revenue. Wow, 20% of revenue is wasted. What do you do about it? 2 kilogram wasted. Okay, 2 kilogram is okay, but you express as revenue, becomes more, draws more attention, management attention, and to make decision. This is EMA, Environment Management Accounting. Are we all right? Are you clear? Hello?
Yes.
Yes, sir.
Yes,
So
sir.
EMA is both talking about quantity, measuring quantity, and also the monetary data. They're analyzing and then become information for internal decision making. And this is something that United Nations Expert Working Group finally defined. What is EMA? What is EMA really meaning? Now, what should management accountants do? How should they gather data? What data should they gather? How should they analyze it? How should they report it? This is exactly what happens now. Okay, next is the techniques, right? Techniques that United Nations Division for Sustainable Development, they said to really account for this environmental cost, there are certain techniques or methods. One is input outflow analysis, another one flow cost accounting, another one is activity-based costing and life cycle costing. These are the 4 methods they say can be considered by companies, which method you want to choose to calculate this environmental cost and report to your management. So input output analysis is about measuring input, output, and difference. So you material input is 100 kg but came out 80 kg. 20 kg has gone missing. Then this 20 kg you try to identify as scrap and waste. Then 10% is scrap, 90% is waste, right? Then you try to look at the money value. Product 150,000 you spend, scrap is 10,000, waste is 40,000. Total spend is 200,000. And in terms of percentage, product is only 75%, waste is 5%, scrap is 20%. Whatever it is, scrap is 5%, waste 20, total 100%. So you convert the money value into percentage, so it becomes a bit more useful for decision making. So this is input outflow analysis. Input output, you see the differences in terms of quantity first. Okay, flow cost accounting. It records material flows throughout the organization, but then organized structure. That means how the material is flowing or energy is flowing throughout the companies, and you start recording them. So they look at the 3 things: material, system, delivery, and disposal. So material, system, delivery, and disposal. They analyze into that, then report on these 3 things: material, system, delivery, and disposal, right? In terms of kilogram and the money value. So the objective is to reduce quantity of material, total cost, and have positive impact on the environment. In fact, that's the objective for as a whole EMA's objective. Okay, this is another flow cost accounting. Next, we have activity-based costing. This is interesting. Total environmental cost is 1,000, let's say. You analyze the cost into pools: waste, water, energy, transport. And for each pool, you identify what's a driver. Example, waste depends on number of kilogram wasted. Water, number of liters used. Energy, kilowatt hours used. Transport, number of kilometer traveled. So these are the drivers for the cost we incurred. Now you divide the cost pool and the driver, you get your cost per driver. Like waste, 3 ringgit per kilogram. You take 300 divided by 100 kg, you get 300 per kg. Water, 20 cents per liter. Energy, 1 ringgit per kilowatt hour. Transport, 75 cents per kilometer travel. This is how you look at the cost pools and the cost driver. You can calculate the cost per driver. And once you become aware of cost per driver, then action can be taken. by management, right? So that the cost become fairer and better control, because when you want to control the cost, you have to control the activity, the cost driver. Like you want to control waste cost, you got to reduce the number of the kilogram wastage. You want to reduce water, you have to use liter, the number of liter use must be lower. So you try to closely relate the cost into the activity, because it's the activity that gives rise to cost. So once you identify this cost effect relationship, right, then you can manage environment cost better. This is activity-based costing. Next comes life cycle costing. Life cycle looks into cost for the entire life of the product, before the product comes into existence, during the product life, and after the product life. So it looks at before, during, and after, right? So the cost is like research and development, designing, manufacturing, marketing, distribution, dismantling, safe disposal, special logic, recycling. So life cycle cost falls on 200 over 4-year life of the product. So you don't calculate cost yearly. Upfront, before the product is made, you already calculate what is the estimated life cycle cost of the product, total cost of the product from the beginning to the end. 4 years, we estimate the output is 1,000. So the cost per unit become 420. So 420 comprised of research development cost, recycling cost, manufacturing cost, everything included in it. Conventionally, we only include the manufacturing cost. Only manufacturing cost is considered as a cost of the product. But now under life cycle cost, they say, no, it's not only manufacturing cost, the product cost is much more than that. Before itself, there's a cost incurred, research, development, designing cost, and all that. And importantly, this designing is particularly important to reduce all the other costs. If you do research, development, designing correctly, manufacturing cost will be cut, distribution cost will be cut, dismantling can be cut, disposal cost can be cut. So it all starts from before. If you make a decision wrongly before, the other cost cannot be cut. So this is what we call it as you engineer cost out of the product through engineering. So through engineering, through research development and designing, you already cut the cost already, which is the role of engineers, right? So we have these 4 methods to account for environmental cost. Companies can choose either one to manage the environmental cost. Right, this is proposed by the United Nations Division of Sustainable Development. Okay, Alif. Sorry, Alif, I'm running out of time already. 11:13 already, isn't it? Alif, are you there?
Yes.
Okay. So sorry, I'm taking time here, but what time is given for you all? 1 hour. Hello? I'm not aware of that. No? I said about 1 hour, but we will finish it very shortly. Don't worry. Okay, so that means you can see clearly. I want to highlight to you R&D and design is before. Manufacturing, marketing, distribution is during the product life. That means the product already come into commercial stage, and we start producing and selling. That is during the product life. One is before the product is come to commercial stage. And after product life, you have dismantling, disposal, and not recycling. That's after. So they said you cannot just calculate the product for the 4 years only. Manufacturing, marketing, distribution cost, because conventionally we did that. Now they say no. Even you start calculating cost before the product and also after, then it will be total cost, life cycle cost from the beginning to the end. Yeah. Okay, activity-based costing example. I'm going to give you a very good example about how you can use EMA in a gym. Okay, first identify environment cost. In this case, will be cost of energy used power to power washing machines. That's electricity and all that. Water, electricity will be energy cost. So let's say the amount spent is 412 ringgit and 50 cents per month by the gym for environmental cost. Step number 2, identify cost driver. That's activity that will increase the cost or reduce the cost. That means number of towels washed. If you wash more towels, the cost will become high, energy usage. You wash less towels, the energy usage will be less. All right. So you identify cost driver as number of towels washed, 3,300 per month. So now if you divide it, the amount of energy cost with the number of towels you wash, you divide it, you get 12 ringgit 50 cents per towel. That means the energy cost to wash a towel is 12 ringgit and 12.5 cents, right? 12.5 cents to wash a towel. So once you calculate this through your activity-based costing, right? This 12.5 cents becomes first impact. First impact is people, the management of this gym and the supervisors, whoever it is, they become aware of the cost itself. Wow, 12 ringgit, 12 cents we are spending to wash one cloth, one towel. Wow, 12 cents. Uyo, itu quite high. How to reduce this? Kenapa you spend so much? How to cut down? That's the next thing the impact is. Once you become aware, it provokes ideas, provokes inquiry mind that how to reduce it, because it's so much we're spending. So that will lead to the next impact, data collection. How to reduce it? What should I look at it? Data collection. It becomes natural part, right? And this data collection is example. You observe your customer coming in, how they're using towel, who's using the towel. You observe. You collect data and all that by observation and all that. Then later, after observation, you get information. That is, you realize that some customers are using more than one towel on a single visit. Some are using one towel, some don't use, some are using more than one towel. Wow. So how to stop this? Because that usage, that behavior is making our energy costs high. Because they use, we spend. And the cost incurred in this process is very high. And nobody bothers about it. So once you calculate, we become aware. Now we start acting as how do you create a behavior where customers coming in to use the gym will only use one towel. Won't use more than that. This one, once you know already, you educate. Management decision now. Promote environmentally friendly awareness and inform customers that they will be charged for second towel with a view to save environment costs. You inform them. Save energy costs. Then you put all the global warming signs everywhere. Be responsible. Okay, those patrons who are coming in to use this gym, your members, please use one towel. If you're using more than one towel, you have to pay for it. This is part of environmental saving initiative, saving the earth initiative. I think customers will be very happy. That's interesting part. Customers appreciate the effort and stick to one towel. You know, and this means what? Benefit. Cost saving by company, because energy cost, staff cost, machine operating cost save. Environment benefit, savings in usage of natural resource, energy and content. Enhanced reputation, environment friendly gym that stands to attract more customers. You see, very simple effort, but it all comes to data, information. Somebody have to collect the data and calculate how much are we spending to what energy cost to wash your clothes. We have to calculate, we have to collect the data. Then later we see what efforts to reduce. We have to educate the customers themselves. And eventually these are the benefits you get. We have better service to customers, customers happy, we get more customers and a better reputation for the gym and all that. All right, are we okay? Alif?
Yes.
Yes, by name I'm Gogu, Alif. I'm going to remember Alif's name for a long time, I think. But this, when we look at this this way of presentation, I have no choice. I have to talk to one person at least, because we cannot have everybody on the mic. Then there will be a lot of respect, and some will respond, not respond. So at least, Alif, you're helping me a lot on this presentation. Seriously, thank you very much, Alif. All right, you'll be wonderful. Don't worry, you will be good kid, man. You, right? You will become very responsible engineer. You're doing electrical engineering, right?
Yes.
Don't worry, you will be successful, right? You want business, you want customers, contact me in future once you become engineer. I'll become your very good customer. Don't worry, all right.
Thank you, sir.
Yeah. Okay, now uses and benefit of EMA. This is by the United Nations itself. They say that, look, there are three benefits. Compliance. So once is companies comply with all these environment protection, all that, cost efficient and all that, there's a natural benefit. Planning and implementation of pollution control investments. and investigating purchasing cost-effective substitute for toxic materials. Instead of buying material which becomes toxic, you start looking at materials which won't become toxic in another process. So there's a lot of research done, a lot of research to be done, and a lot of thinking to be done. But we cannot continue doing materials and then become toxic. Reporting environmental waste becomes a bit more responsible already. Okay, next is co-efficiency. This is about producing product which is useful to customers, at the same time minimize usage of energy and all that, at the same time reduce the impact, negative impact environment. So it's all win-win situation, and yet you're still able to make profit. While making profit, you also make a win-win situation for everyone. So EMA supports similar cost reduction, impact on environment, and more efficient use of energy and all that. This is the advantage law. All right, examples I have given you: more accurate tracking of flow of energy, water, material, and waste, planning implementing water efficiency projects, and also looking at total return on investment. Example, if you're investing in equipment that is going to give you less emission, the benefit will be in the long run, of course, in terms of reputation, in terms of not being fined. You are become close ally of the government effort to reduce wastage and all that. So you can get government protects in the long run and all that. So the benefit will come in the long run, right? Definitely, it's not so tangible yet. Strategy position, this way you position yourself strategically to sustain your operation through EMA. So EMA support evaluation and cost effective environment sensitive programs and all that. So if in the long run, you're able to strive because you are implementing EMA, very responsible way of managing a company. Working with suppliers, design products, green markets, internal costs like future regulations and all that, and reporting stakeholders. So you build a close rapport with your stakeholders as a responsible company. This is how you should position yourself environmentally. And we are changing the way we should do business rather than just looking into money, 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 money. And they say money, money, yes, only shareholders support. But even shareholders now, they're saying that we want a responsible investment. We don't simply invest in a company that is throwing rubbish in the environment, causing pollution. It'll affect our kids. I make more profits, I get more dividend, but our kids going to suffer in the future. And so shareholders also becoming aware, and profit motive is becoming planet, profit, and people motive. 3 P's, not only 1 P there, not profit alone. Profit, planet, and people should be focused. So sustainable growth. So when you talk about the planet, we talk about EMA already. Yeah. Okay. EMA challenges. Current accounting practice is a challenge. So the challenge is moving away from current accounting practices. Then moving away from current accounting practices should be internalized, meaning you shouldn't wait for the pressure from outside. We wait for pressure from outside, we just reacting only, not proactive, right? So reactive is not so good. Proactive will be better. So environmental costs are hidden in overhead costs. Next, we have a flow of materials is not properly tracked. Without a proper system to track all the flow of material. A lot of environmental costs are not accounted for. I told you, like iceberg. We only see a little bit, but a lot of costs we are not able to see. And we also have communication between departments is very weak. What one department doing? That means, let's say in production, there's a lot of wastage thrown away, but accounting department not aware of all this, not reported. Because there's not captured. So there's no communication between production, accounting department, or HR department, for instance. Lack of training. HR department is doing different training. Production actually require different training in terms of waste management. So it doesn't go along unless they sit and talk about environment. Everybody. So if they are not sitting and communicating, they all take care of their own function only. HR department take care of their own function. They have to do some kind of training and all that. Production department take care of production only, meet customers' orders and all that. Then you can't focus on environment. Yeah. Next is investment decision often based on incomplete information, right? When you make an investment decision. So that's another one, because investment decision sometimes will take long term, 5 years project, but you're only calculating the cost of the project 5 years, but there are costs incurred after the 5 years, which is conveniently ignored or unaware of it, right? So these are important. Okay, Next, EMA development is UNSD, that's United Nations Division for Science, working on expert working group on EMA. So already form an expert working group involving a lot of scientists and all that, engineers and all that, and also accountants, and seeing how we can provide better information for better decision making within the company. Right, there's a guidelines and all that. So this was formed in 1999. There are about 30 countries members, and also other accounting association, academia, all are members, right? And all that. I think, yeah, David. Sorry, yeah. Okay, bye. I'm still there, lah, David. Sorry, Okay, sorry. I got a call to attend. Sorry, guys. Not a good practice, right? Okay, now towards 21st century company, we have, this is by Omron Global. Interesting. So they say everywhere throughout organization, right? It's not only accounting, everyone should be environment conscious. So it'll be eco factory, eco management, eco mine, eco product, eco communication, eco logistic. So logistic travel friendly must be environment friendly. Factory must be environment friendly. Management must be environment friendly. Your mind must be environment friendly, not about money only. Your mind must be environment friendly. Communication should be environment friendly. Product must be environment friendly. So everywhere should be environment consciousness throughout the company. It's not a job of only one person, two person. This is a culture you got to create, and you have to develop a society with this mindset. So it's not only company. The company should take initiative eventually to boil down into a culture, and this might start from your level. That's why it's good that the institute have invited, and we are engaging in green technology and all that, So it's good that we are becoming aware and all that. So it's important. It's a culture changes, basically. Become a responsible customer first of all, not to buy products simply that cause damage to the environment. So we also should become environmentally responsible, not only the company and accountants and engineers. As a consumer, we also contribute. If you buy, they continue produce, like smoke. If you smoke, they continue to produce cigarettes. And there's no win-win situation here. It's a lose-lose situation, even though shareholders are making profit. So it's a cultural change that we need. Okay. Now, designing out of ways of civil engineering project. This is almost coming to end. Okay, civil engineering project, especially electrical, civil engineers. Some of you might be civil engineering background. So I just want to show this slide on key principle, because in civil engineering projects, there's a lot of waste and a lot of environmental impact, negative impact. So key principle of this is one, design for reuse and recovery. This engineering, it's nothing to do with EMA, right? EMA is almost over, but I'm saying that engineers are the key people who can prevent waste, prevent emission. We only calculating, the management only calculating the waste and the cost. We only calculating, but you can prevent it before even we need to calculate. So designers are the key people who can actually contribute to reduce in greenhouse gas emission, reduce wastage and all that through designing. You design out cost, waste. Through designing product, the flow, you already save many costs already for the consumer and also the environment. That's very important. So my son is doing engineering, and he's focusing on sustainable energy. He is doing his master's now, and told him it's a good choice for you because he chose it. Sustainable energy is a focus of his research and all that. He's in UK now. And I said, father is an accountant, right? I'm an accountant. I know my accounting world, and I'm only calculating after all the damage is done. After you throw waste, I calculate the waste. What's the point? After you I'm going to calculate all this. Then ask the decision to be made. No, this is wrong. The accountant's way of life is a bit different, right? I said, engineers, you go in front of us. You reduce the waste first. That's why I was very happy that you chose engineering, and it chose particularly sustainable energy to focus on, to specialize on. But that I like to share this with you also. Basically, engineers are very important. Of course, management accountants are there to give information to management to make a decision, but engineers are not giving information to make a decision, but they are the key people. And you are the ones who have to force management's thinking, change management thinking, the engineers. So it's the engineers that is very important to save the earth, basically. Yeah. So you engineers, you should know. So it's designed for reuse and recovery, means use material that can be reused rather than throwing away, right? Designed for off-site construction. That means you don't construct things on the site because there'll be a lot of waste, there's a lot of manpower involved, and a lot of accidents and all that. So you use prefabricated. That means you do it and then come and fix it there yourself. So a lot of them are doing this already. You already know. That is another way. Designed for off-site construction. Another one is to design for material optimization. That means through innovation, use material which are light and heavy, can be more lasting. Example, fiber reinforced composites. These are examples of use material which are less weight, cost less, but can last longer. So fiber things are already into it. And now construction already changed. I know they're using no more conventional method of building buildings already, right? Next, design for waste efficient purchase. So this is buying material that will cause less wastage and all that. And finally, we have is design for deconstruction and flexibility, meaning that avoid buying materials that is difficult to recycle later or throw later, right? Try to use materials which can be recycled easily, right? Also, try to use materials that that will not become solid waste, can be reused for some other purposes. So this is how engineering is very important to reduce costs, to actually escape costs at the design stage itself in construction, civil engineering. Just to share that finally. Okay, so concluding remarks is EMA provide data needed for many environment management initiatives, right? Cleaner production, pollution prevention, green productivity, design for environment, environmental friendly peripheral purchasing, environmental supply chain management, extended producer responsibility, performance management. That means employees and managers should also become responsible for environment. Therefore, your KPI, the only measure whether it's a good employee or good manager, something environment must relate to the performance. The key performance indicators must contribute. That means, example, how much idea they contribute to reduce waste. So those employees that contribute idea, they get reward. So that's part of the KPI, giving ideas, to reduce waste, save energy. So KPI must also come into not just how fast you do the job, but also how you save waste, how you reduce wastage, and all that. So there are many advantages there. I'm just listing out. EMA has a lot of advantages basically to give it. So that will end up my presentation today. Thank you, and I welcome questions which you don't have time. Sudah pun lambat lah. 1.5 hours. But in case those who are I'm sorry, all of you, because I probably went down a bit faster on my presentation because there are all these key elements I got to communicate. I cannot have half knowledge only. So what I've given you is a complete picture on, brief but complete picture on EMA, right? What traditionally the accountants, what is the role of accountants, what mistake they did, now what should they do to give information, better information for decision making within the company, and for managers, directors to make better decisions. But again, it all depends on the mindset of the directors themselves, and they are under pressure from all these pressure groups. So without that, we can't move. Accountants cannot move on their own, and engineers are the frontliners in terms of reducing all these negative impact on the environment. And consumers, we as consumers also must become environmentally responsible. So with that, any questions? Alif, are you still there, Alif?
Yes.
Jose,
Yes.
Okay, sorry, I ran very fast with you. I have no choice because I I prepared so much, and I thought, and then I edit and said, no, this is the minimum I have to talk to you. I cannot talk less than that, because if you attack less than that, there's no proper information. So I got to cover this a minimum I can give, right? Of course, I can go on talking for hours, right? Giving you example of efforts, how much efforts be done, and how companies are not following, and what many things we can do. But this is the minimum I can give you, and it took about 1.5 hours. So sorry for stretching the time a bit, right? Apologies. I hope that this session has been useful for you all. At least open an eye on what accountants do and what is this environmental management accounting is all about, and also role of those who are not in accounting line, engineering. What can you do to prevent global warming, right? Which is very important, I think. No, COVID. I just got a call yesterday night. My cousin, the whole family is COVID positive already, living in Kajang. Whole family, is a newly born baby, only 4 months old, kena. Right? For 4 children, 5 children kena, and there's grandfather, grandmother, there semua sudah kena already, COVID-19. But they say it's a normal flu we are having. When they went for the test, and lucky, one of them, because they're already having this sickness, they said, uncle, I'm having sick and all that. I said, normal flu. They've been checking one after the other, thought normal flu, except until my cousin got the flu, and the company regulation is, the company is working for, they say, if any staff have a flu, immediately must go for COVID test. That's the regulation. So he had a flu, you had to go for COVID test because of the regulation. He went, it's positive. Wait, then the whole family went, everyone positive. So it's something I would say that please stay safe, but you can't run away too far, from this COVID, looks like it. So it's become part of our life. So we're talking about 4th wave coming in now. So stay safe, everybody. It's Bulan Ramadan. I know there's bazaar and all that. I have empathy towards the celebration and all that, but please stay safe. All right. Wash your hands and all that, Susana cakap lah. Life, another year is going to be tested us. Last year and this year is also, I think, going to be tested. Right. Anyway, any questions, please, before we say bye-bye to the session? Anyone? Alif, any questions?
No, sir.
No,
Sir,
Sure.
can I have your
My
contact number or email?
Okay,
Yeah.
I tell you what. Okay, I will end the show and give you the contact here. You can still the site, right? Okay, my contact number will be. Let me just write down my contact number here. Can you see my contact number? Okay, my telephone number is 012-526-6500. My email will be gobunachiapan@yahoo.com. All right. Okay. So this is my contact details. You can call me anytime. I'll be more than willing to share any information or whatever. So last time I used to come to Poly for only the accounting department, right? Used to come and give talk, right, on all this management accounting and all that. Only confined to the accounting department invite me once in a while. But now after COVID and before COVID, they said the funding is very less. But then I said, as part of CSR activity, my firm, right, I do have a firm. I don't mind doing as a CSR activity to come and share all this knowledge I have, which is limited, but will be useful for you all, even though it's limited. Yeah. Okay, Alif, you have the information?
Yes, sir.
012-526-61. That's my telephone number, my email contact, right? Anytime
Yes,
you
thank
can
you,
send,
sir.
you can invite me also. You can talk to your head of schools, whatever. If you want me to give more elaboration on all this, I can come by all means. All right. Okay. And we can do it online also can. All right. Thanks a lot, everybody. All right. Thanks for listening to me. And let's stay safe. And also, let's reduce our greenhouse effect, negative impact on the environment. Let's become more responsible towards the environment. And also, Selamat Bulan Ramadan. Have a good month and also a good celebration. Right? I wish all of you going to have a good celebration. Hope lah. No? Last year couldn't celebrate. This year, I think
Thank you, sir.
all waiting for celebration. But be careful lah when you go for holiday and all that. Take care lah. No? All right. So, all right. Bye-bye, everyone.
Thank you, sir.
Yeah, bye-bye. Yeah.
Thank you, sir.
Bye-bye. Bye-bye. Bye-bye.
Thank you, sir.
Yeah, welcome.
Bye, sir.
Yeah, thanks. Bye-bye.